So there have been some major oil supply curtailments, disruptions, concerns lately, and yet prices have actually remained pretty stable. Neil, how do you explain that?
Yeah, I think that is the main point. You in the run-up to the interview, you cited the Brent price still being below about $71 a barrel. We've become used now to the ongoing supply worries in Libya and Venezuela, the Iranian sanctions issue, the removal of waivers, which we were told about a few weeks ago. It looks as if the markets are going to take that in its stride because of expected higher supplies from countries such as Saudi Arabia. So before yesterday's attacks, the market was, and indeed the weekend attacks off Fujairah, the market was feeling reasonably confident that supply would be maintained. Now, of course, an element of doubt has entered into things because of the attacks we saw yesterday, but I think the market has taken the view that the attacks have not caused any sustained damage. They have not interrupted industry operations in production or exports, so the market remains focused on the underlying fundamentals.
But Neil, do you think that the oil price already factors in a possible demand shock?
Well, I'd be careful about the word demand shock. Yes, there are headwinds in your news headlines. You were referring to the trade talks between the United States and China, and there are some other concerns about other economies that might be seeing slower growth. In our report today, we've downgraded our oil demand growth forecast for 2019. It's the first downgrade we've made for several months, and the downgrade is fairly modest in reaction to some slightly weaker than expected data in Q1. So we're not talking in terms of a demand shock, and we don't see that on the horizon. We remain relatively confident that demand growth for oil in 2019 will remain relatively robust.
And Neil, you were just talking about the markets that are taking basically these attacks on tankers and pipelines almost in their stride in the Middle East, assuming that nothing will get worse. What's your assessment? How will that play out?
Well, we can't know how the geopolitical situation will develop. Obviously, there are many, many factors at play here, and it's beyond my capabilities as an oil analyst to understand that. The view we take at the IEA is that energy security and oil security is of paramount importance to the global economy. And as always, the main players in the market, particularly, of course, on the supply side, will do everything they can to ensure stability. What happens in terms of any real major cutbacks in supply due to attacks, we'll have to wait and see what that would mean for the market. But I think we're a long way away from that.
Neil, how are you looking at oil demand in Europe? I know we saw a little bit of weakness in diesel demand. How do you explain that?
Yeah, diesel is an interesting picture. There's a particular issue related to diesel, of course, arising from the so-called Dieselgate scandal, which started in Germany. And what we've seen in recent times is very poor performance in terms of the sales of diesel-fueled vehicles in Europe. And that is one of the factors which is driving down diesel demand. That's, of course, in some respects, not such a bad thing, because, of course, later this year and at the beginning of 2020, we have the introduction of the new International Maritime Organization rules on shipping fuels, which is going to have a major impact on the whole of the product market, including, of course, in Europe. So in some respects, lower demand for some of the on-land diesel uses might not be such a bad thing as we head towards 2020.
Neil, what do you think OPEC and its allies, OPEC Plus, actually need to do right now to keep the global oil market balanced?
Well, we have a very interesting and dynamic situation at the moment, as we've been talking about. And OPEC's next meeting at the end of June is still 6 weeks away, which in today's market is still a very long time. However, what is noteworthy is that the OPEC countries, and supported, of course, by Russia and some other producers, are actually producing less than they're entitled to do under the terms of the supply agreement they made at the end of last year. So those countries do have some scope, if they choose to exercise it, to increase their production if there were to be tensions in the market, and do that without actually breaching their supply agreement. So we'll have to wait and see. 6 weeks is quite a long time, and we'll wait and see what decision the ministers take at the end of June.